Welcome to another edition of the Murfreesboro Real Estate Report. This is the report for the week ending November 24th, 2025. Wow, we're almost at the end of the 11th month of the 2025. Kind of hard to believe there, but hey, I'm John Turner. I'm the team lead of the Turner Victory team at Onward Real Estate. We're located in Murfreesboro, Tennessee, and I bring you this report every week where we enjoy covering the local real estate numbers. We also look at some trends, some things that's going on in the national real estate market as well. But without further ado, let me go ahead and jump in over here to our report. Move me over here. So this week, and we're looking down here at the bottom numbers. This week, 1,481 available homes. 1,481 available homes. We have 117 new listings. 102 homes went under contract this week. We had 94 homes actually close, and we had 100 homes expire or get canceled where the sellers pulled it off the market. So either they weren't successful in selling. So it was either they pulled it off the market or the listing agreement expired. In the past 3 months, there have been 1,320 homes sold in Rutherford County. Currently, we have a 3.37 month supply of inventory. That means if no other homes came on the market today and demand remained the same, it would take 3.37 months to eat through all that inventory. 6.89% of the available homes went under contract, and 6.35% of that number closed this week. So let's take a little closer look at this as we get into some of our charts. First of all, our new listing chart. For the most part this year, we've trended slightly below last year on the new listings. But last week we were up 2 weeks ago we were up just a little bit. Last week we were up quite a bit, and this week we are up quite a bit. So 117 new listings compared to 88 this time last year. It's also compared to 106 last week. Let's look at our pending chart. If you notice, we had this big drop here back a couple weeks ago, going between 2 weeks and 5 weeks ago. So big drop over last year because red is this year. Last week we did outpace last year just by a couple. This week we were down again. Last year there was 119 homes that pended this week of 2024 and 102 this week in 2025. Now that is up over last week, so that is a positive sign, but it is down. Now it'll be interesting to see where we are right here because this is Thanksgiving week, and notice a big drop there. There still were 64 homes pended last year. It's going to be interesting to see whether we're above or below that. When we look at month supply, we continue to just creep along in the 3.3s and the 3.4s. We did have this 3.52 month supply peak right here, but man, if you look back here, in the summer we got down into 3.1s, but for the most part, 3.2, 3.3s. That just tells me our inventory is not growing a lot. It's not shrinking a lot. It's remaining pretty steady. It will be interesting to see if anything tightens up right in through. If you look at last year, you could see where this dipped down a little bit, starting about where we are. So I don't know. We'll see. I would anticipate not as many homes coming on the market. We anticipate our inventory to tighten up a little bit. So that may affect those numbers slightly, but time will tell. So this is the traditional, going back to 2023, available inventory. But let's look at last year, 2024. If you notice that this is going back to January, right in here is November. And you can see how it dropped off November and December. That is traditional, and there was 1,081 homes on the market right there. We started the year with 1,078. came up a little bit, but basically stayed pretty low till we get back into the spring and start increasing. That's what I'm anticipating this year. Maybe not as drastic of a drop, but we can see where we peaked at 1606, and since then we've slowly gone down. This is the second out of the past 4 weeks that we were in the 1400s. And this is the lowest inventory we've had. You have to go all the way back to the first week of July to see less inventory on the market. We're going to look at our pending percentages graph. So this is what percentage of the market actually pended. And I like to look at this because, if we had 100 homes going under contract and there were only 100 homes on the market, then all of them went under contract. If we had 100 homes go under contract, but there was 100,000 homes on the market, then a very small percentage of them went under contract. So I think this really helps show our demand versus our supply, which is a basic economic principle. If you look over here, all right, so the blue is going back to 2023. All right, so the blue's going back 2 years ago, light blue. The red's going back to last year. If I got that right? Yeah, going back to last year. And the dark blue or black, whatever you want to call it, is this year. It is interesting this week, for some reason, these numbers are closer than they've been in a while. 2 years ago, we had 8.65% of the market go under contract. Last year, we had 7.5%. This year, we had almost 6.9. So those numbers did tighten up a little bit compared to what we've been seeing here recently. I don't know what to make of that. Really doesn't. 1 week really doesn't matter when you're looking for trends. It takes 3 or 4 or 5 weeks to really start seeing a trend. So, all right, let's talk about the 30-year mortgage rate. Again, I say this every week. This is not necessarily the rate you're going to get. Your rate's going to be dependent upon your credit score, what type of loan you're getting, how much money you're putting down, things of that nature. But this is a good graph for us to look at because it takes the average 30-year mortgage rate across the nation and graphs it out each week. This week, we ended the week at 6.26, so that was the average 30-year mortgage. We did bottom out here back at the end of October at 6.17. So that shows a slight rise right there. Nothing real big. I did like the way we were trending down, but we'll see what happens moving forward. If you remember, the mortgage rate is based upon really two things. It's based upon the 10-year Treasury, and it's based upon the spread. Okay, so what mortgage? There's a thing called a spread where it's how much money does the mortgage company need to put in there to cover all their costs, basically. So if we look at the 10-year Treasury, the past 5 days, we've actually seen a pretty decent little drop here. We started the week out at 4.11. We finished the week at 4.06. Now, I will tell you that a lot of this drop was on Friday. If I go back to these mortgage rates here, if you notice here, it ends on Thursday. So this would not take into account Friday's drop, but we did see a nice little drop on Friday. I don't know what's going to happen come the first of the week. If we go back and put this, let's go back and look at 6 months. You can see that compared to where we were, 5 or 6 months ago, it's definitely down. If I want to put a year on it, we did see a little bit of a drop back in April of 2025 of this year. But look where we started the year out at. It was really high. So that's one part of it. I want to pull up this graph, and please watch your eyes. This graph may hurt your eyes here. This is the spreads versus the 10-year Treasury. I believe that this page right here will show it a little bit better. I've tried to zoom in on it because it really is the way that's laid out. It's a lot, but this goes back to 2005. Now I could put a different track on it to go back even further than that. We'd go back 20 years, and what you're looking at is that spread. So right now that spread, we're looking somewhere on the spread of 2.14 right here is what it's ended at. So if you take that 10-year Treasury and add 2.14% to it, that's really where your mortgage rates end, or where they end up. So if you notice back here earlier in the year, that spread was over 3. Okay. Back in 2021, that spread was at 1.54. So not only does the 10-year Treasury affect what the mortgage rate you get, but it's also the spread. If you look back, I thought I had this going back 20 years, but I'm probably zoomed in too far to really make that happen, because I really wanted to be able to show this chart. There we go. That moved it like that. But if you look at it, I mean, where is our average in here? Our average, I believe, and it should be on this chart, but I believe it's somewhere around 2.5, if I'm correct on this. So anyway, we're not way off on the spread. We still talk about affordability, and really what happened is home prices went way up. I know mortgage rates did, but they went back to a more traditional standpoint. I think, based upon everything we're going to hear, I've said this before, I don't think we see below 5.75 next year. I think we're going to be somewhere between 5.75 and 6.25 for most of next year. Really what we need is wages to catch up, and really home prices are probably going to soften a little bit to help make all that happen and make it more affordable as well. At least that's my prediction. I take it for what it's worth. I tell everybody I've got a crystal ball. It just has a big crack in it. So that's John's take on it. All right, let's talk a little bit about sellers. Are they motivated? In Murfreesboro, they are motivated. They've moved from neutral, stubborn, all the way over here to motivated, and getting in pretty well into the motivated category. That's based upon price drops and the significance of the price drops. One thing interesting is in Murfreesboro right now, the city, our price drops, 39% of all homes on the market have experienced a price drop. That was up to 41%, maybe even 42%. So that's come down slightly. That either has to do with people pricing their home correctly, maybe not, or it may be some of those that were overpriced have just pulled their house off the market. I think that's probably the more realistic thing. Going into the holidays, a lot of people don't want to be on the market, especially if they're not getting any traction. And if you're overpriced, you're not getting any traction. So here in all of Rutherford County, motivated sellers 5.71 on this scale. And we do have, in all of Rutherford County, there is a 41% of the homes on the market have had a price cut. If you look over here, Bedford County, look at that. Bedford County, price cuts. 58% of all homes in Bedford County have a price cut. That's, for those of you who aren't familiar, that is the adjoining county to Rutherford County. So just interesting to look at. Shelby, we know there's a lot of people getting motivated over there. Most of these are more of your rural counties. The lowest one over here, 34, Sumner. Sumner's doing pretty good at 34. Williamson's at 35. So anyway, just some interesting information. A couple of other things on the national level for you. This right here, the share of mortgages that are underwater. So that means they owe more on the home than what it's worth, inches up to 1.6%. So 1.6% of every mortgage out there, the mortgage is for more than what the home's worth. Okay, we haven't seen a whole lot of that lately because we'd seen so much appreciation. But if you go back to 2009, as you can see here, 23% of all homes that had a mortgage on them back in 2009, the mortgage was for more than what the house was worth. And I could tell you, someone who was in the business at that time, it was brutal. I mean, people were selling their house, and we went in and we talked to them, and we'd have to talk about how much money they're going to have to bring to closing in order to make things happen. We actually just had a closing this past week, and our sellers had to bring money to closing because they had bought within the past couple of years. And you hate that whenever a seller's in that position. But the way that we've seen prices over the past 2 or 3 years where they've been flat or maybe slightly declined, it's not unusual that we're seeing that. So here's a chart. It can look really scary. One thing that does bother me, the share of U.S. mortgages that have mortgages with negative equity rate by loan type. the ones that are mostly underwater, or the bigger share, is the VA loans. And you say, well, why would a VA loan be that way? Well, it's a 100% loan. So, it stands to reason if price goes down and you had a loan for 100% of the value, you're going to be upside down. Probably not upside down a whole lot, but you're upside down. Now, I caution everybody, don't get too bent out of shape about this. The percentage of homes underwater is still very small. The headlines may read something different, but it's still very small. But also, it's like the stock market. It doesn't really matter whether your stock goes up or down today unless you're selling it today. If you're in it for the long haul, or if you're going to be in it for a year longer or 2 years or whatever, it doesn't matter. Things fluctuate all the time. So whether you've got negative or positive equity in your home, unless you're selling, it doesn't affect you. But if you are a home seller and selling in Rutherford County or Murfreesboro, Smyrna, Eagleville, Laverne, wherever you are, certainly if you bought within the past couple of years, your numbers very well may be tight. One other thing I want to share with you is the National Association of Realtors has come out with a report that the first-time home buyer was 40 years old. 40 years old for the first-time home buyer. I mean, that is unbelievable. The American dream is really getting tough for our younger people. That's the reason why you hear a lot of things about mortgage portability, because that may free up some inventory. The 50-year mortgage that came out because they're trying to figure out a way to make it more affordable for our younger generations to have a part of the American dream and be able to own a home. The good news is affordability has eased over the past year or two, so it is getting better, not as quickly as I know a lot of us would want, but that is a big focus right now, is the affordability. I do think we're going to have to see home prices in our area come down a little bit to help out with that, especially in what have traditionally been our quote-unquote first-time home buyer price points. Just the wages don't match up with what the home prices are right now. So you will see, I think you're still going to see some, like I say, negative appreciation possibly over the next couple of years. I do not hear market crash whenever I say this. I'm not seeing that right now. The FHFA charts come out next week. That's where the federal government looks at our metropolitan statistical area and says, okay, well, for the third quarter, this is what prices did. I expect that to be a negative number. I don't expect it to be more than -2. But I do think it's somewhere between 0 and -2. We'll see. That's my prediction. I don't have data to back that up. It's just whenever I look at this every day, that's kind of what I'm seeing. So that is your Murfreesboro Real Estate Report for November, the week ending November 24th, 2025. As I said earlier, I am John Turner. I'm the team lead with the Turner Victory team at Onward Real Estate. We bring this to you each and every week. If you find this information valuable, please subscribe. Also, please leave a comment. That really helps us out, number one. But what would really help us out even more is if there's information you'd like to see. We love bringing you this information, and we're more than happy to bring any information that you want if it has to do with the local housing market. So please comment and let us know what you think. And thanks again for tuning in. We'll see you next week. But until then, make it a great week. And since this is Thanksgiving week, I hope each and every one of you have a wonderful Thanksgiving.